Hi everybody, and welcome to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. For all of our new viewers from BNN, your timing in joining us on our FANG Friday webinar is quite auspicious. While the markets may be richly valued, we still see further upside for the overall market of about 13 to 15%. More to the point, however, 3 additional FANG stocks look to be offering buy signals right now. Additional, that is, to our recent buy signal on Amazon, which has been rebounding up off a 10-year low. I suspect that after doing very little for most of this year, that the FANG stocks which have not been in what I call my phantom FANG portfolio, Netflix, Apple, and Amazon, are about to play some catch-up. And Alphabet, my favorite FANG stock, which I sold when it reached my very long-term target, looks as if it isn't done yet. But before we take a close look at those FANGs, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Let's start off with Microsoft, which is between 2 breakpoints. It's HB2 and it's HB3, which is 12 and 16 times book value, respectively. For our new listeners, I have to tell you that the breakpoint values are power law multiples of adjusted book value. For newer subscribers, hang with us and you will see that you will get some very powerful signals both on the buy and the sell side using them, which are the equivalent of the support and resistance levels of the standard technical analysis. Anyway, Microsoft just keeps soldiering on higher and higher and higher. Nothing spectacular, just steady advancement. Facebook, the second stock in our phantom FANG portfolio, has reached back to its high at its bubble price, which is 7.4 times book value, once, twice, and the third time. I'm not sure whether the stock will be able to break out here, particularly in light of, for instance, the development at Apple, which they're revised their programs to stop allowing Facebook to capture some of the things that they have done before. Finally, the third stock in our phantom portfolio now is Amazon, and the reason that it's in there is because Amazon had fallen to its HB2. That's 12 times book value, and that has been a 10-year low for the stock. And since it's hit there, it's been turning up quite nicely. Now, Netflix, a stock which I haven't particularly liked because of the competitive pressures, nonetheless, looks very much as if it is moving up. It has moved up to its HB3. Okay, that's 16 times book value, and looks as if it is trying now to break out. And it may be doing that quite successfully. Apple also looks as if it is trying to break out. Now, I'm saying this on 2 grounds. The first one here, if I put in a sort of a parallel line here showing the highs, the recent highs for the year, the stock is breaking out above that. But I'm doing it for another reason. I suspect that the trend of the book value, which is, of course, what the HB6 breakpoint shows you, I suspect that if Apple has continued buying back stock, as it is promised to do, In that case, then the book value of the stock is probably down here, and therefore it looks very much to me as if the stock is breaking out. So it may be breaking out on two counts. First, technically, and secondly, from an SVA point of view. Alphabet. Well, here, Alphabet has been my favorite FANG for a long time, and the stock has had a beautiful, beautiful run. I'm showing here now initially the 10-year look at the company, because it has not been higher than its bubble price, well, back since 2008. Now, the reason I think that it's done as well as it has is because you can see the regular trend of the fair market value, which is a proxy for the earnings of the company, but that has recently accelerated and has moved the stock up, and right up, as I see, to its bubble price. Not quite extreme, but pretty close, of course, for the past 10 years. Now, if I look at it very, very closely, you can see here that it appears very much as if the stock is breaking out and wants to move higher. Indeed, this morning, actually, the stock set right back to its bubble price and has rebounded. I think that I will have to turn around and rebuy the stock in my Phantom FANG portfolio. Finally, NVIDIA. Well, you know, the problem with NVIDIA from an SVA point of view is that after giving us a beautiful buy signal back in the early part of the year, and then, of course, we took our profits on the company when it moved from its HB3 to its HB4, setback, but didn't quite give me a buy signal, so I didn't put the stock back in the portfolio. I also showed what happened as far as other stocks in the semiconductor industry is concerned, and I will have to admit that it made me kind of nervous. Now, in summary, our Phantom FANG portfolio has 3 stocks in it: Microsoft, Facebook, and Amazon. But as you saw, it looks very much as if another 3 are joining the group: Netflix, Alphabet, and Apple. That would mean that every FANG stock will be in an uptrend and leading the market higher once again. By the way, for our newer subscribers, last year I made a forecast for Apple, a little tongue-in-cheek, but only a little, that a $4 trillion market cap was theoretically, even if absurdly, possible if the company kept seriously buying back stock. That forecast is looking a little less madcap than it sounded when I made it, as the stock is nearly has now gained actually 25%, more than 25% of the way to that absurd mark, and a breakout here would add another 28% to its market cap. If the shares were to rise to their HB7 price, or 42 times book value. Well, hey, who needs earnings when a rising PE and a price-to-book ratio will do the heavy lifting for you? Finally, NVIDIA had been slipping back to its HB4, 20 times book. I'd hoped to get a trade, but it didn't quite get there before turning back up again. Even in SVA, we don't win them all. And looking at the other semiconductor stocks, an exercise that I took our subscribers through a little while ago, NVIDIA still makes me nervous. Now, my takeaways for this week: as far as the overall market is concerned, our upside target, the low super growth price for the S&P 500, or 4.5 times book, remains intact. We are still bullish and plan to stay fully invested, as the short-term downside risks are comfortably below the upside potential. As I have been saying, our parachute is still safely tucked away. Second, three FANG stocks look as if they are making a breakout simultaneously. And I would now add all three to our Phantom FANG portfolio. No bear market in sight here as of yet. Finally, if you'd like to learn more and see if SVA can help your understanding of the stock market and your portfolio, then send us an email at info@strategicanalysis.ca to learn more. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.